Good morning, traders. Welcome to today's market review. This is Fred Razak at CM Trading. Today is January 28th, 2019, and today is Monday morning. So looking at the major economic events of the day, we have two speaking engagements happening today. ECB President Draghi will be speaking at 4 o'clock South African time, and then at 4:30 South African time, Bank of England Governor Carney will be speaking. So major events happening later today. But taking a roundup on the markets, looking at the Forex symbols, GBP continues to gain, and the euro looked like it revived itself from the bottom of the range last week of 1280-ish level, broke support at 1330-ish level. We'll take a look at that in just a moment. But looking at the indices, Dow Jones gains and is trading on resistance, but looks like it's going to pair its gains later today. Looking at the commodities, gold does an alley-oop, jumps from 1282 to 1300 on Friday, based on the shutdown rumors and based on what's happening in the United States, but mostly because gold is strong. Okay, you could attribute many reasons to why gold did the alley-oop and trading at 1300, but we'll take a look at that in just a moment. Oil retraces to $53 a barrel. Doesn't look like it's going to take off above the $54. And lastly, looking at the stocks, Amazon, Apple, Facebook on the upper range, and look like they're pretty much capitulated. So the question is, will they continue? And let's take a look at that as well. So taking a look at the ECB, President Draghi will be speaking today. And look at this, 1295, 1280-ish level. We hit there last week and then just alley-ooped it on the upside and trading a 114-ish level. Now, we mentioned this last week. We've been trading between the 1481-ish level and 1332, and we're smack in the middle of that right now. Okay, so lack of direction for us in the euro, because this could really go either way. But you could see the advantage of trading the upper range and the lower range when you're trading higher probability trades. Greatly trade there from 1280-ish level, 1290-ish level to 1409-ish level, over 100 pips there. Now looking at the GBP USD, we're looking at a daily chart. This thing has been strong. We mentioned it, and day by day, it's just an upwards momentum. Nothing to really hold us back. It can continue. Just be aware that we are hitting somewhat of a resistance at 132.220-ish level, which is about 50 pips away. But we look like we broke above the 131.44 resistance level. So that's a major breakout for the GBP. Very nice to see the GBP actually revive itself after being killed. USD CAD back on its bottom at 132.16, and this is really on the back of oil. Okay, now oil being not clobbered, but selling off a little bit here at 52.99-ish level, $53 a barrel. But as you can see, we've been every time we hit this resistance level of 54, we sell off. Okay, so I don't believe we'll be back in the $60, $70 range, but I think we'll be trading between 50 and 54 for quite some time as we continue to trade there. Looking at gold, 1301. Look at this alley-oop move, 1285 to 1300. Now this is really on the back of many different factors that are coming about, but you could see and you could really appreciate the support level we had here at 1278-ish level, let's call it 1280-ish level, and then taking that up on the upside. Now, jumping into the Dow Jones, we're trading right now at 24,624. Okay, and we look like we're, tapering off here a little bit. Okay, we had this massive rally from February, from the end of December, let's say the day after Christmas, up until now, we moved over, 2,000 points. Closer to 3,000 points from our lows. Now, the question is, where do we go from here? Okay, now we had the overreaction to what we had in November, December time where we sold off. The markets looked like they were going in recession. And now we look like we're pretty much just factored in. Markets are not going into recession. They may be growing at a slower pace, but they're not going into recession. So we kind of find ourselves in a funny situation, because if we were going into recession, the markets would sell off, okay, quite sharply. However, since we're not going into a recession and we're just going into a stagnation kind of situation where we're not growing as large as we had anticipated or as quickly as we grew last year, you kind of find ourselves in a flat situation. Okay, I don't think that the market's going to react too greatly to what's going on. We may sell off about 500 points, 600 points, but I think in terms of until we get some sort of direction from the big stocks, If they're really losing money, then we'll get a confirmation in the market, so we'll still have that sell-off. But right now, I think we're just really already just factored in. So 24,600-ish level is a normal level for us to be in. However, looking at Apple, we're at that top of the range. Okay, if it doesn't break above this 158-ish level, it could surely test its 148-ish level, and then we'll see a sell-off in the Dow Jones. Looking on Facebook, the same story. We're at the top of the range, but really needs to break above this 151 to show us that it's really strong. Okay, Amazon, same story, which is even weaker, trading at 1666, shy of our 1711 high-ish area. Okay, whereas Facebook and Apple are trading around those areas. So this is really important to note that if you see one of these major stocks actually start selling off, that might be an indication that the indices will also sell off as well. So just be aware of that. This is Fred Razak. I want to wish you guys a great trading day. Thank you.